Hey, good morning, everybody. Welcome to another episode on the Freight Be Moving All Things Logistics podcast with me, Jewel Williams, your hostess with the mostest, baby. Now, let me stop. I hope all y'all are doing great today. It is Tuesday. Ooh, getting closer to Thanksgiving. I believe Thanksgiving is next week. And then, of course, we got Black Friday. And everybody loves some Black Friday, so you can buy all these things that all these companies are storing in their warehouses and reduce their inventories, so they hope. And then when you reduce their inventories, they'll be able to order more stuff, and then we'll start this whole thing engine with the economy again, and so forth and so on. Yep, that is the plan. So on today's show, since I did that little intro, on today's show, we are going to be talking about the logistics of money. Everybody loves to talk about money. It is not the root of all evil, but it is a great tool. However, there are some people that just abuse it. But one quote I'd like to share today from Vera Nazarian. I know I probably butchered that name. Vera Nazarian stated, "Money is like fire. It is only good when there's just the right amount of it, when it's properly contained and under control." I like that. I like the way that sounded. That's why I wanted to share that with you today, because money needs to be told what to do. Thank you, Dave Ramsey, for that one. I'm not going to take credit for that. I heard him say that for many, many years as I listened to his podcast. Tell your money what to do. So what is this money thing in logistics? What am I going to be talking about? I'm actually going to be talking about just one area, because this subject is huge. And let me just make a disclaimer. I'm not a financial accountant. I'm not a financial attorney. I'm not an attorney of any sorts. I am just sharing my understanding of how this whole freight and money thing works, so that maybe it'll help some people as they're out here either starting a trucking company, working with a trucking company, or maybe they're a freight broker, or they're starting a freight brokerage, or maybe they just curious on what is this thing about money and trucking and factoring. Now, I learned about factoring years ago, and I remember when it began to get pretty popular, to where you could start your own factoring business. Factoring is, and I'm not going to try and memorize it. I'm actually going to cheat. I had my little sheet here. Here we go. So I'm reading this from a guide, freight factoring guide, and who put this out? Apex, America's Favorite Factor. Now, this is not a commercial for Apex. I don't know they even know who I am. I just Googled this. I thought this was a good way to help me with this topic today. So what is factoring? A freight factoring company purchases accounts receivables, invoices, from a trucking company for a fee. Factoring allows companies to get paid faster and is especially helpful for managing cash flow when a carrier is working with brokers or shippers that have payment terms of 30 days or more. Now, when I bought goods, when I purchased I had a online business, and we purchased our goods from the supplier. We would pay cash because it was cheaper to pay the cash and buy the goods and then sell them, put the original back into the bank, take the profit, purchase more inventory. That's the best case scenario. So this way everybody gets paid with cash. Now that can be taxing though, because a lot of people like to hold on to their cash. They like to keep the cash in the bank, especially when interest rates are at a certain level. People like to play around with getting a little interest on their funds in the bank and then dispersing based on that. So there are a lot of games that people play with money. And I say this because I have been in companies that use those types of tricks to leverage the bank or leverage their cash. And what they mean is they don't necessarily use all of what they've got. They kind of lean on the bank and loans and time to get what they need. So in a transaction, this is like a best case scenario. And I'm using myself as an example because this is how, when we purchased items online, this is how it worked. So I'm the buyer. I place an order with a company that manufactures a product. That company says to me, okay, I will send you these items and this is what it will cost. Let's say we're going to use simple math. We're going to say it's going to cost me $1,000 and that includes my shipping cost. So to ship it from the origin to my door is $1,000. That includes the product and that includes the shipping. All right, so we're on track here. Now, depending upon the distance, I, the buyer, may or may not have insurance, or the shipper who is sending it to me may or may not have insurance. Most of the time, one of us has got insurance. Maybe both, but most of the time. And the reason for that is accidents happen. Anything can happen between point A and point B, and you want to have insurance to always put yourself back at whole. So if ownership does not transfer from the shipper to me until it gets to my door, well, then the shipper's probably going to want to have insurance on the goods, right? So that's a good thing. Now, if ownership transfers to me upon leaving the dock of the shipper, well, then that means I need to insure those goods, because I want to make sure it reaches my door. And if it doesn't reach my door, I'm going to have to go back and be put back into hole because my shipment got damaged on the way. Now, a lot of times what you'll see what will happen is, and when I worked in freight, if the customer received some goods and they were damaged, then they filed a claim against the trucking company, whether that be an LTL carrier or whether that be an owner operator, whether that be a small shipping company, whoever got that shipment to their door, they filed an insurance claim against that company. Most of the time, you have to read the fine print when you buy insurance, because I have seen situations where people buy the insurance thinking they paid $1,000 and they're going to get their $1,000 back, and they only get a percentage based on the weight of the cargo. So you always want to make sure you understand your insurance terms. Again, I'm not an insurance agent. I'm not an insurance broker. I'm not an attorney. But these are experiences that I have had, and that's where I'm telling you from. So back to our scenario. I bought something, and I don't take ownership until it reaches my dock, my door. That's when I take ownership. So that means the the shipper insured it from the time it left their dock to the time it reached my door. Okay? Now, so I get my goods. And the manufacturer shipper says to me, "We're going to send this to you, and you have 30 days to pay the bill." Because I decided I didn't want to spend my cash this time. I'm going to hold on to my cash. So I'm going to buy this on what they would call credit from the manufacturer. So the manufacturer ships me my stuff. I owe them $1,000, and I have up to 30 days. So that usually the The term for that is net 30. Some pay net 60, some pay net 90, depending upon how big the bill is and cash flow. All those things are important. So now I have my goods sitting on my doorstep and I have an invoice that I have to pay in 30 days. So the carrier, though, when does the carrier get paid? Because that carrier had to move that stuff from the dock all the way to my door. But I'm not paying the bill for 30 days. But that carrier may not be able to wait 30 days. So here is that twist that comes into the storyline. Large carriers, for example, your Schneiders, your JB Hunts, even your XPOs, those are your carriers that have assets. They have the trucks. Most of those carriers have got the capital to wait 30 days for that bill to be paid. But that's not the case when it comes to an owner-operator. Most owner-operators are expecting to be paid upon delivery. So now we have a little bit of a twist because that shipper is not going to get money from me for 30 days, but yet they need to release money to the carrier before that 30 days. So what should they do? What's their options? Well, they can come out of pocket and dip into their capital funds, pay the carrier, send them on their way. But if they want to hold on to their cash just a little bit longer, they can do something like factoring, where they will sell the receivable, which is what I owe them. They will sell that invoice receivable to a factoring company, and then the factoring, out of that money, they can pay the carrier. So that's one way of how the money can flow. Another scenario, if there was a freight broker in between that transaction, in other words, I worked with a freight broker to coordinate this with my carrier, or excuse me, with the shipper. Well, then that freight broker was tendered the freight, and then they used a carrier to get that freight to my door. So now that freight broker has to turn around and pay that carrier. And if they don't have the cash, they'll use factoring, a factoring company, where they will sell the factoring company the invoice. The factoring company will then issue them the money at a discount. So if the invoice is worth $1,000, they may only get $900 or $800. And then out of that $800, they're going to pay the carrier. And then they keep their profit. So those are, and in the meantime, I still have to pay that bill. But who am I paying? Who's sending me the money? See, these are all these different things about this industry that a lot of people who go into business with this industry may not be aware of. And you got to set yourself up to succeed. So you want to look at the transactions and logistics of money. And you got to ask yourself, when you're about to enter these transactions, who's paying what to who and when and how? Who's paying what to who and when and how? Okay? So as a business owner, you want to go and you want to look at how am I getting paid? How is my money coming in? Now, in my transaction, I purchase goods. We're going to say some widgets, just to give a visual here. I purchased $1,000 in widgets. Well, I get my money back when I sell all my widgets. So my money is going to come from the consumer or the person or business even who buys the widgets. My shipper, the manufacturer, got their money from me. And then there's this carrier and this broker in between there. Those two have to get their money maybe sometimes from a factoring company, because the manufacturer, they're not ready to pay yet. They're not paying out any money for 30, 60, or 90 days. But a lot of small brokerage firms, a lot of small carriers, owner operators, they can't wait 30, 60, 90 days and running around. They would need to have a substantial cash reserve in order to do that. And that's one of the tricky parts about this industry. It's easy to enter into it because of the lure of fast flow of the cash flow. I didn't mean that to rhyme, just the way it came out. And with that, you have to look at, okay, if I don't have a cash reserve and I'm really just pulling money based on each transaction, you're basically living like paycheck to paycheck. So a better way to do that is to itemize or estimate how much money your truck, your brokerage business needs to function, so that you can have that money to get you to that point that might take 30 days. Or you might not have to rely so much on factoring companies, because you're going to lose $100, $200 every time you sell that invoice. And that can get pretty expensive. It may seem like a quick fix, but that can get pretty expensive. So basically, the whole purpose of this is to understand the flow of money. So you've got, when you make the transaction, you want to ask, what's the invoice payment term? How long is it going to take you to send me the payments for this invoice? Is it 30 days? Is it 90 days? 60 days? What is it? Most times, also remember, the bigger the company, a lot of times the longer the pay period, because these companies are working on a whole different accounts payable system. And they have to, it's a pecking order. Something's got to be paid first, second, and third. Let me give you an example. When I worked in custom brokerage, customs got paid first, most definitely all the time, because customs was a U.S. government agency, and they penalized you for not paying that invoice on time. And you don't want that. You can go over here to the customer and negotiate a longer term. But U.S. Customs, you had to pay right away. So if you were in that pecking order and monies need to go and flow U.S. Customs, oh, now we need to pay this carrier, oh, now we need to pay. The further down the line you were, the longer it took for your payments to get. And a lot of times people had to call and say, hey, I rendered this service to you. I haven't received payment yet. What time frame are we looking at? Your cash, your invoices are cash. That's why factoring companies exist, because they know that people don't want bad credit reports. Businesses have a credit report on Dun & Bradstreet or through credit companies, credit bureaus. They have the same terms and conditions of being held accountable for payment history as an individual does. A company is an entity on its own, therefore they have they're a person. So you got to look at those things and ask yourself if that's the kind of company you want to do business with, and are you going to be able to hold down the payment to that carrier before you get your money from that shipper. So those are some of the things you want to evaluate, think about, strategize about as you're getting deeper into your business, building your business, or even if you're just starting your business. These are all things that you should be considering, is not just the processes, but how does the money flow? You gotta know how the money flow. All right, I'm gonna wrap this up. I'm making it quick today, and I hope this information was helpful to you all, and I will see you tomorrow. And remember, if you are in an 18-wheeler or a 4-wheeler and you on the road, I'm gonna need you to be safe. Thanksgiving is coming up. Your family want to see you. Everybody want to sit down and have a nice meal and share all about this wonderful year that we had and all the ups and downs and laugh about all this foolishness. Yeah, so I'm going to need you to pump the brakes. I'm going to need you to be safe. Peace and love. Out.